Hello guys, hello, can you hear me? How's everyone doing today? Sorry for that 2 minutes late. I was just fixing the camera real quick. Today's a very humid and hot day here in Brazil, so kind of have the tank top going today. Guys, hello. Just fixing here the final things, opening up the There we go. How are you guys doing today? Hope you guys are doing well. Welcome here to today's live stream. I have a couple of things planned. We're gonna go through the options, this week's options. How did it go? It went, spoiler, it went very good. We collected the full premium from last Friday, which was very high. If you remember, if you don't know what I'm talking about, you can go back and watch last Friday's video. So yeah, let's start by showing you how it went, how the portfolio is looking. Let me just connect my MetaMask real quick so you guys can see. Also, let me know if you hear me all right, if everything looks good on your end, so I can start sharing here my screen. All right, let's go to the desktop and camera. We are here on Lyra, whatever you guys want to call it. We go to portfolio and we have collected the full premium from yesterday. You see it is showing 6.24 as a weekly return, but it's actually 3. I don't know why is it going with the other one. I don't know why it's saying 6. Should be 3.2, which is what we collected last week. So hello Erman, welcome. So right here, if I can pull up the trade, I think it will be expired already. Let's see if I have the link. The link for the trade. Okay, if I pull it up, is it gonna show something or not? Because it already closed. There we go. So you can see the option went to 0 right here, and we collected that 5203. So you can see right here, 12 hours ago, it expired. I got back my collateral and I got also the premium. So the profit and loss is just the amount of premium we collected before. Very simple. You can see everything delta, everything is to 0 just because the option expired already. And this was last week. So today we're going to go through another trade. We're going to see what we're going to go for this next week. So I've been looking, and because delta went down a lot, how do we know not delta, sorry, implied volatility? If you remember last week, it was over 100. It was 108, 109 when we sold. So if we look actually to the stats right here, you can see that a couple of the yesterday, excuse me, implied volatility was like very high. It was 107% implied volatility. We'll be talking about implied volatility also today after we do this trade, this weekly option. And I'm going to explain that to you because a couple of people asked me, what is IV? Why is IV so important for crypto, for options in general? Why is IV a deal breaker? And sometimes for when you're selling an option, and why sometimes it is better for you to collect no premium at all instead of risking to collect the premium because IV is low. So we're going to be talking about this also. But as you can see right now, we have around an 80-ish, 84% implied volatility, which reflects right here. Every option, every strike has a different implied volatility, but overall, if it is at the money, we should have that 83, 84% IV, implied volatility. So if we go to sell call to November 25th already, we already are here. These are the ones available. For some reason, that is very low. I don't like this. That's very this is very low amount of strikes. Last week, same thing. We tried to sell a strike, but it went too out of the money, so it disappeared on us. This one already looks like a 26, which was probably the same amount that we sold last week. Maybe Erman can recall. I think it was 26 as well, the delta. Again, very high delta. I don't like it being that high. But if we go here to vaults, let's actually see the utilization of these vaults. If you don't know what a utilization is, because they have limited liquidity, then they can, at one point, they need to close the options. They cannot no longer allow options to be traded. So if we go to not fees, TVL, they should have, okay, utilization 59%. So meaning they already utilized 60% of these 9.6 million to open positions and also neutralize these positions. Because again, if you don't remember how it works, when you open a position on Lira, because it is an AMM, they have to neutralize it so they don't lose money. So you open a call, they go and they do the opposite on the other side. So even though there's a lot of liquidity, $9.6 million is not a small amount, it needs to be neutralized, delta neutral, theta neutral. So they need to neutralize your position with another position, even though they already opened the position as a market maker. So this is why we run out of liquidity so fast with AMMs. So this is why we have just few strikes to choose from. But again, I don't like picking up, I don't like selling options on a Friday morning. I wait for it to go to Friday night, sometimes on a Monday, just because Friday sometimes can be very hectic day for stocks. If you know, sometimes stocks can get a little bit crazy. And I just got a notification here. Let me see. Oh, my friend actually gave me 5 real, which is the Brazilian currency, and he called me beautiful. Awesome. Thank you, Arthur. Happy birthday. It's his birthday today, so congratulations, happy birthday. Anyways, coming back right here. What was I talking about? I just forgot what I was saying. Anyways. We have a very few strikes to choose from. If we go to the put side, we have the 1000, and the delta is actually about to disappear as well. Because here on Lira, once it goes at under 0.09 delta, so if it goes to 0.089, it just disappeared from the list. It doesn't get listed anymore. So let's see what is the yield for this one. Actually, do we want to sell a put? I don't think we want to sell a put. Let's look at the charts real quick, because I don't like where the market is going. Still, because of the FTX situation. Ethereum is at 1210. Let's go to the 4-hour chart. Yeah, Bollinger Bands is very low, but still seem to have a downtrend right here. But for the 1000, how far are we from 1000? We are 17%, 17.5 almost from 1K, from the 1K strike. And from the 1300, we are 7. Okay, so 10% difference. That is a lot. So we have to consider that. For calls, what do we have? For calls, this is it, 26. For puts, the lowest one is 0.93. Let's see. So today as collateral, I'm going to go for 1450. And let's take a look at how much we have here. 3.2 maybe. Oh, we can go higher. Go 3.8. 3.8. 700. We can go 800. We can go 4.3. 842. 900. Okay, so if we go, let me explain again. Oh, you guys couldn't see it. My bad. Let me go all the way right here. Okay, now you guys can see. So I'm gonna put 1450 in collateral. If you remember last week, I only put 1400 in collateral, but because we collected $50, now my portfolio went up $50. So I like to leave some cash available. If I need to buy it back, I'll have to spend a little bit of money to buy back these options if they go against me. So that's why I leave some extra cash. I do not put all my available SUSD here as collateral. So 1450. And I leverage my positions. If you know, for my strategy, I leverage my positions. So how do I leverage? I put 1450 as collateral, meaning that I can go for 1.4 contracts, because if I need 1,000 to sell one contract, if I put 1,450, I can sell 1.45 contracts. But I'm leveraged a lot, to be honest, this time. So actually, I will be leveraged almost 4x of the same amount of the capital that I have. And since I'm collecting 658 per option and I'm collecting almost 5 contracts, then I will get 3156. So how much is that in yield? If I was gonna sell this put right here. So we get that 3156. We divided that by that 1450. We collect 2.17%. And this is selling a 0.9 delta? 0.93 delta. This is really good, to be honest. This is really, really good. And let's see. Let's take a look again right here. Actually, on the chart, it will be very, very unlikely for Ethereum to go to 1K. Now that I think about it, because 1K is like a danger number. So we can see right here, we have these horizontal rays. So here we have 1K. Right, there you go. So right here, we would have to go and test this because it tested multiple times. This was in June and July. It tested multiple times the 1K area. So I think we are safe and we're collecting a very good premium. So in a couple of weeks, because I sold a call here, I sold a call here, and I sold a call last week. So the last 3 things that I did was, this one was actually a put, call. So I think after 2 weeks of selling calls, we're going to go for a put right here. We're going to go for a put. What do you guys think? If you have anything. Oh, okay. I was saying that I don't like to trade on Friday morning. Thank you, Erman. I just saw the chat. I don't like to trade on Friday mornings because the market can go against you. And it is better for you to wait for the weekend, because on the weekend, just crypto, there's less volatility because just crypto, the market's not going to be affected by stock news, by earnings, these sort of things. They kind of might get prepared for, so to say, if we know there's earnings on a Monday for a big stock company, like Tesla, Amazon, whatever. But otherwise, the volatility will go down a little bit on the weekend for crypto because there's no news, no crypto, no stock news to be traded with. So this is why I wait for stock market to close and then I trade these crypto options. So going back, I think the put right here would be the best thing for us, because then I can only get liquidated if you go to 900. The thing is, since I already collected that what was it last week? 52.6. So 52.6, 5260. We divided that by 1400. So last week I got a 3.75. Amazing yield, amazing yield. You're not going to see that every week. This week we don't need to risk that much. So even though we already are on a very low delta, I'm going to lower my risk right here. I'm going to go from 4.8 to 4.6, still 30, and I need Ethereum needs to go down 27% in 1 week for me to get liquidated. I don't see that happening. I'm going to go with this put right here. So let me sell this put. I'm going to confirm the transaction. It's going to pop up my MetaMask right here. Very cheap fees as always. And bam. Your transaction was successful. We start with a negative yield. As always, every time you will get a negative yield, just because we have a bid and ask difference. The spread is very high here on Lira. So you can see the current price is 830, but what I paid is 630. So let's see what's the yield for this one. I got $29, 29.00. We'll divide that by 1450. So the yield is 2%. We've made 2% so far for this week, which is amazing. You know, how much would it be if I did not leverage at all? Like no leverage, just selling this put right here, 667 for 1K. So we go 667 divided by 1000. So 0.6%, almost 0.7% without any leverage, which is amazing. Because let's go back right here to the calculator. Let's say we have 1K and we go to 0.67% weekly, 1 year weekly. So we are compounding. We are still making 43.7% per year. So no leverage, very low risk because of 0.9 delta in our case. It's a very safe delta right here. No leverage, anything. We still get that, where's the calculator? We still get 43%, 43%. I'm going to show you, I'm going to do a review on Grizzly, which is a yield farm. Everyone is talking about Grizzly, so you probably know about Grizzly right now. I'm gonna go through their farm, their aggregator strategies that they have, and I'm gonna tell you my opinion personally if I think it is better for you to stake that money there or do this strategy. And also, I'm gonna go with a little news that I have. Let me see if I have anything here in the chat. Erman, I did the same trade this week. Then we have some spam. I did the same trade this week. Well, did you get it this morning? Did you just get it right now, Erman? How did it go for you? Did you still collect the same amount of premium? So now that we've done our trade, we have it right here. So far, it is showing at minus 26%, just again, because the yield is different, showing us as negative so far. But I think it will be good for this week. Let me just add it right here. So I'm gonna, to put at 100. So I'm gonna clone this real quick. And I'm gonna move it down Oh, it is locked to 1,000. Okay, so let me move this all the way to right here. This goes to Friday. There you go, right here. So let me turn this off. There we go. This is our week's strike. So it would have to fall. It doesn't matter if it falls, to be honest. Right here. As long as it doesn't fall 17.4%. So Herman is saying that he collected a 1.2% premium. Good job, good job. Tinas, I hope I'm saying your name right, says, what is the liquidity like if you want to buy it back? Okay, that is a good question. Let's go back right here. So I have my trade, right? I have my trade. This means that they already, these guys here, Lyra, they already had, they separated an amount of money. They have locked it up as liquidity for me to close this position. Now, unfortunately, on Lyra, there's a very, very bad thing. What is this thing? Well, the thing is, on Lyra, you need, you pay fees for you to open and to close. Of course, you can mitigate these risks, not risks, these fees by going here on rewards, for example, and you can stake staked Lyra. You can stake the Lyra token and also the OP token to either become a liquidity provider for the protocol, and then you can earn some yield by doing that. Sometimes not, but the majority of the times they do neutralize the option, so you are profitable as a liquidity provider. But also you can get trading rewards and staking rewards. So if you have an amount of Lyra, like 1K of Lyra tokens, you get 20% back off your fees. So can I actually see how much I paid in fees for this one? Didn't show. I can see it right now. Okay, anyways, but I did pay an amount of money in fees. Let's say I paid $5 in fees. Now, if I want to close this position, okay, I will have to pay a fee. So let's go right here, close, max, whatever. I will have to pay $7 for me to close this position, okay? There's no liquidity issue here. There's no liquidity issue here. If I want to close this position, they will have the liquidity to close it because they will just give me my money back, the money that I allocated, and I'll pay the fees or the premium difference for this to close this option. So in my case, I will get that $14.50 back, but I will have to pay $7.81 and give back the premium. So they gave me right now $29 in premium. I would have to give it back plus $7 just because right now this option is not profitable. This option is not profitable because because of the spread. The ask and bid spread is very bad. So, but let's say this option is profitable. Let's say this option is like I have $20 in profits. Okay, I'm already very out of the money. $20 in profit. How does it look then? Okay, same thing. I have to pay the fees, and those fees are going to be deducted from the premium I've collected. Okay, so if I have $20 in profit, if I'm $20 in profit, that minus the fees are going to be my overall profit. Okay, so no liquidity issues. If there's no liquidity, you cannot open the position. But if you are already into the position, you can close it by paying the fees. I hope this was a clear explanation. I think it was a little bit confusing, but I hope you understand what I'm trying to say. Okay, so overall, we've marked it right here on charts, on TradingView. Now, let's talk about why implied volatility is important. once we understand why implied volatility is important, I'm going to show you we're going to review the Grizzly protocol. So implied volatility, let me go full cam actually for this. Full screen, Sony, there you go. So you can see all my beauty. So implied volatility is important for options, not for crypto options, but for options as a whole. It's important for every option. If you go to trade stock options, you're gonna look or you're gonna hear people talking about implied volatility. For crypto options, same thing. Implied volatility is a very important factor. Why? Well, because think of implied volatility as a forecast metric. So, before you go out, you just go, Alexa, how's the weather going to be tonight? And Alexa's going to say, well, we looked into it and we think it's going to rain by 10 p.m. So it's a forecast metric. Can they get it wrong? Yes, they can, but it's a metric, it's a tool to speculate or to feel how the market feels about a certain asset. So how does the market feel about Ethereum right now? Well, we can do that. We can see this by looking at implied volatility, which is, for example, right now, 98%. So this is the volatility that I just sold. It means that the market thinks that Ethereum will have a 98% a 98% movement up or down in 1 year. The implied volatility is annual. It is not monthly or daily, because 98% in a day would be ridiculous. We all would be rich, right? So these things get wrong all the time, okay? But they do tell us, they're like the fear and greed index. You probably know the fear and greed index. It's how the users are feeling about market conditions. So the IV is kind of like that thing. They show you the forecast of how people see future price movements for these assets, for Ethereum, for Bitcoin, Solana, whatever. If you see Solana's volatility right now is through the roof because people think Solana will move a lot. Implied volatility does not tell you direction. Implied volatility doesn't mean it's going to go up, or it doesn't mean it's going to go down. Oh, I just saw my microphone exploding here. I hope I'm not making you guys deaf by yelling in your ears. So implied volatility does not give you direction. It just gives you a chance of fast movement into this asset. So we, as options sellers, we like high volatility, because when high volatility dies out, meaning that the market, the people did not get it right, let's say, people were thinking the market were going to move a lot. For example, pre-merge, everyone thought that the merge was going to cause that huge movement in Ethereum's price. That did not happen. So what happened? Volatility crashed. This is good for us sellers, because when volatility goes down really fast, we have what is called IV crush. IV crush is what makes a lot of buyers lose money every time. Even though they get the direction right, they get strike right, it goes in the money, but they lose money on their option. Why? Because of IV crush. Meaning, I'm probably saying some gibberish right now. Meaning, these guys predicted right, but because volatility went down, the options price, so the what we collect as a premium as a seller, that dries up. It's like closing a dam when the river, there's too much water in the river. They just close the dam, and then the rest of the river dries up. There's no more water flowing. That's the same thing. When volatility goes down really fast, the premium dries up. So even though, so for us sellers, we want it to happen because we want the option to expire at zero. We want it to go down to zero. And once that happens, we keep the whole premium that we collected. Okay. So this is why it is important. This is why you look at IV and then you look at the Greeks. Okay, they work together. They work together. For example, Vega is the IV movement. Okay, so all of these things are important for you to look at, but sometimes people don't consider IV a lot. So this is why I was saying in the beginning, if there's too much low volatility, it's better for us not to sell anything. So there's too much low IV, it's better for us to think about it for a second and be like, well, I'm not gonna sell anything this week. Just because if IV goes from low to high, as a seller, you get wrecked. As a seller, you will get wrecked. Even though you got the direction right, if it climbs up like on a Monday and you have to a Friday to expiration, that can be the death of you and your strategy. Okay, seems a little bit hard, but it isn't really. I might be bad at explaining, to be honest, but I hope you guys are understanding so far. If not, ask questions right here. I'll try to answer them for you as best as I can. So next topic, let's talk about the Grizzly. Let's do the Grizzly review right here. People were, I don't know if they're bots, man. I don't want to judge. I don't know if they are bots or actual viewers of mine, but there's a lot of people complaining and telling me in the comments on my videos, on my live streams, hey, you gotta talk about Grizzly. You gotta talk about Grizzly, okay? Grizzly did reach out to me. These guys wanted me to make a video about them. We never went through with this. It was supposed to be a paid partnership. Of course, I do not take partnerships that I don't agree with. I don't agree with what they're promoting. I did think Grizzly was an okay, and they were just starting. I did think that they were an okay aggregator, okay? But for some reason, we never went through with the sponsorship. So I'm just going to cover it here because a lot of people were being bugging me. I'm going to say what I think about it. Let's take a look at their website real quick so I can show that to you. Desktop and camera. There you go. Let me move this out of the way again. Okay. So speculate less, earn more. Of course, here, this is a complainer. This is something that I have to complain about all protocols. Okay. Me as a user, I don't want to have to hear, I don't want to have to read gibberish. Okay. Not so much for Grizzly. Okay. They make it simple. If you scroll down, there's this right here. Okay. Take profits, go mining, start earning, exponential compounds, relation and relaxation and confidence. Sorry. It's not gibberish. They don't use big words that dumb retailers are not going to be able to understand. Okay. I like this. This is a thumbs up for me, but they don't explain that much, right? Let me see. I might have to eat my words here. Yeah, so no explanation. They do have a quick explanation on how it works, more or less, in this video right here. But let me run it down for you real quick. They are aggregators, okay? What do aggregators? What does an aggregator do? They're gonna get your money. You're gonna deposit that money into a fund, into a vault, whatever you wanna call it, okay? Into their protocol. They're gonna get that money for you. I think it's better if I go this camera for me to explain a little bit better. Okay, I think this camera is better. So if I have questions, I can read it. So what they do, you as a user deposit your money on their protocol. Okay, they say thank you. Now we're gonna take that money from you. We're gonna look for yield opportunities somewhere else. So they're gonna get the USD, whatever you deposited into. They have a bunch of different places for you to invest, tokens for you to invest. What do they do with that money? They're gonna get that money and invest in other protocols. They're farming these tokens. They're farming these tokens for you. You don't need to do anything. You're like, well, I'm gonna go to the beach. I'm gonna go work. You know, that is This is the closest definition to passive income that you can get. You're gonna get that money, assign that, delegate that money to someone else, and they're gonna say, this is what we're gonna do with that money. Boom, then deposit it there, and you get, they of course are gonna get some percentage on the money that they're farming, and you get to keep the rest. Now, is passive income always the best type of income? Big answer is no. This is a big lie that I think is, it became part of finances so much, but it's just a big no right here. Passive income, it's not like the biggest wonder, okay? Cash flow is, I think, cash flow and compounding interest is what's gonna make you rich, not passive income, okay? So a lot of people are thinking that they're gonna deposit some money right here or in whatever other protocol, and bam, in 5 or 6 years, they're gonna get rich. By doing that, you're not getting rich. No one wants to make money for you out of the kindness of their heart. They want something, of course, and it is not bad for me to try for them to try to help you out if they're gonna get something out of it. Okay, they're providing a service as a service. What is their service? To find places to invest your money. Okay, and they make a commission out of it. Okay, basic thing. But this is not what is gonna make you rich. What is gonna make you rich is for you to cut the middleman. They're acting as a middleman. But for you to cut a middleman, it requires time and effort and study, finding out, researching things that most people don't want to do, unfortunately. Otherwise, everyone will be buying my crypto course. Of course, link in the description right here on Udemy. Everyone is liking it. 4.85%, 4.8 stars rating, so really good. Had to do this shameless plug right here. Now, coming back here. So because people don't want to do all of these steps, they decided to themselves look for someone to delegate this money to. And this is Grizzly, aggregators, Beefy, Yodiak, whatever. Okay? So I'm not mad at any aggregators. I think aggregators are good for people who don't have enough time or don't want to invest enough effort into understanding how these protocols work. So, okay, let's take a look at what they have to offer, what I like and what I don't like about this. So I'll connect to MetaMask so I can show that to you. Account. Switch. Refresh real quick. There we go. So if we go to the desktop, this is their protocol, okay? Which for some reason, my antivirus on my computer says it's sketchy. For some reason, every time I have to go to Grizzly, I have to close to turn off my antivirus on my computer. For some reason, that doesn't mean anything. It might be just something wrong with the website coding. I don't really know what to say. It doesn't mean anything, to be honest. Anyways, we now scroll down, and here we have these hives. They call it hives, vaults, whatever you want to call it, okay? I think the most common term used is vaults, so we're gonna call it vaults. They have here these vaults that they pay you a certain amount of APY, depending on which one do you go. They have the Grizzly hive, the stablecoin hive, the mixed hive, and the single asset hives that will be coming soon. Okay, so this is one token, so just BNB, just Grizzly token, just Ethereum. Okay, so these right here, honest opinion, garbage. Honest opinion. Okay, you can disagree. You can let me know in the comments what do you think. You can comment. You know, comments. The chat is here. I'm reading the chat right now. I'll be showing that so you guys can comment. These, okay, two assets. This right here is with stablecoins, so less impermanent loss right here. But this right here, two assets, you can get wrecked with impermanent loss. The APR is good. Yeah, APR is amazing, fantastic, okay? But the impermanent loss can wreck you because of the honey token, okay? The honey token here is what I don't like. Why? I'm gonna explain that. But here we have something a little better, okay? Okay, there you go. The stablecoin hypes. I love stablecoin farming. This is the main thing that I talk about in the channel. I'm gonna try to make stablecoin Mondays where we just talk about stablecoin opportunities, yield that you can make in stablecoins, in DeFi, in CeFi, anywhere. I'm gonna cover and show all of this to you. Okay, every Monday. Stay tuned. Next Monday on live stream right here on my channel. But let's take a look at these APYs right here. So you stake USDC and BUSD. I love this. I love this. Or DAI BUSD. I love this. USDT, I'm not a big fan of, okay? But we do have better yields with USDT, to be honest. So let's take a look at this one, the highest one, USDC and USDT. Amazing yield, 17% in stablecoins, okay? Now, this right here is what I don't like. Let me just make sure I show that really. Okay, so they are getting only that 2 point something% in actual USDC and actual stablecoin. Only this. Okay. The rest, okay, 2.55. I think this is it. The rest comes from the honey token. I don't know how to call this. GHNY, the honey token. The rest comes right from here. And you can even do the grizzly strategy, which makes it a hybrid. But basically what you're getting, you're not getting the full amount in stablecoins. Okay? You're not getting the full amount in stablecoins. If you want to get everything in stablecoins, you're only going to get 2.55. You're going to get in stablecoins. But if you go, for example, the standard strategy, okay, you're not going to receive this 17% in stablecoins. You're going to receive that in stablecoins, the LP token, plus the G token, the right here. Part of your rewards are compensated in GHNY, so the Grizzly token, okay? And the Grizzly strategy, the majority of your rewards are paid in Grizzly tokens and automatically staked in the honeypot, creating the highest return in the honey token, the highest returns when the token rises in price. What does that mean? The APY that they're giving you is not fake. That's not the word I'm trying to use. It is a boosted reward. It is a boosted reward. It means that, well, you deposit right here. We're going to pay that 2% in stablecoins, and then the remaining 15% you are going to get in our token. We are paying you to leave your money here with us. Okay? What I don't like about this is that their token is a governance token. Okay, so even though it might be capped, I don't remember the tokenomics for the honey tokens, but excuse me, these tokens are governance tokens. Do you want to hold GHNY tokens? Do you, user, want to hold, like, my desire is to have a full Bitcoin, 10 Ethereum, and a shit ton of GHNY token. Is that it? No, no one wants to hold this token. So the first thing they're going to do, once they take that money, take these tokens out of their, unstake these tokens right here, claim these rewards, they're going to sell these tokens, okay? They're going to sell these tokens for stablecoins. or for more Ethereum, for more Bitcoin. This is what they're going to do. They don't want to hold, I don't want to hold this token. Okay. Personally, I don't want to hold this token. On God, I want to hold stablecoins, which is the main strategy right here. We are in winter. We just want to hold stablecoins until we have a better market. Okay. I am buying a little bit of Ethereum and Bitcoin. This is it. Just it. So it is not fair to call this a full stablecoin yield, okay? Because you're getting 2% yield plus a little bit in the GH, the honey token. But this goes back to everything that I say every time. I'm like a broken clock now. They can be paying you 1,000,000% APY in honey tokens. But if honey goes to zero, 1,000,000% of zero is zero. It's zero. So it doesn't really matter if they pay you a huge amount. Okay. Now, I don't think honey is gonna go to zero because these APYs are conservative. These are good APYs. Okay. These are good APYs. These are not no shade. I am not throwing shade here at Grizzly. These are good. They're doing a good job. These are good rewards that they are doing. They're not trying to lure people with huge, stupid numbers, because for a stablecoin strategy, this is an amazing yield. You're not going to find long-term deals that are better than this. Okay. These APYs might go down a little bit later on for sure, but everything above 10% on stablecoins is amazing. So for an aggregator to be offering a conservative 17% or 8% or 10% or 16%, props to them. Okay. They're losing a lot of customers for not offering 20, 25, 35. Okay. But still they're doing a good job. Okay. But if you just look at the stablecoin percentage out of it, is just 255%. 255%. Actually, after fees is 158. Okay. This is it. So here is where something good happens. Let me go back to full screen. This is where something good happens. If you, user, take the middleman away, take aggregators away. Of course, this is not good for aggregators, but this is good for the environment as a whole, for crypto as a whole. When people know how to make that yield by themselves, if you take the middleman away, you can make a higher yield, which is what we just did. Okay. We just did 2%. We just did 2%. We just did 2% in a week. Okay. So in 1 week, we've made almost a tenth of what these guys are offering, a little bit more than a tenth actually, of what these guys are offering the whole year. Meaning that I only need 10 more weeks out of the 52 weeks in 1 year to make the same amount of returns that these guys are offering, and is all going to be in stablecoins. You get what I'm saying? Knowledge is power here. Knowledge is power. I don't want to be like a broken clock. So, but I understand the needs for a middleman, because until 2018, until 2019, I did not have time for crypto, but I wanted to invest. Okay. So there were no major aggregators at the time. Of course, there was Yearn Finance, maybe a couple of those on Polygon, but I still wasn't into DeFi to know about these things. Okay. So what if there was something like this for options? Okay. And then the answer is there is. They're called DOVs, option vaults, decentralized option vaults. Are they good? Majority of these are not good. If you go to Ribbon, for example, Ribbon, they have they're the biggest one in TVL for crypto options DOVs now, but they do suck. Almost every vault that you get, they are doing bad. They have a huge drawdown per week. So if you lose, that week's gonna be ridiculous. This is where I created something. Let me show this. Let me show this right now. I created something. So D-Hedge is a protocol that allows people like me, like you, whatever, to create vaults or pools, okay? And here users can invest their funds. They can deposit their funds into these pools, and the creator of the pool can manage these funds. So in this case, me, I can manage these funds. So I created this option selling pool right here on DHedge, okay? And I just created it. You can see less active 7 hours ago. Just created it a couple of weeks back, but I just finished tinkering with this right now. What am I going to be doing this? So far, this is private. This is private. You cannot just get here and deposit your money. I'm going to be choosing a couple of people to beta test this. I'm going to start selling weekly options just as I do here on this channel. And with this fund, I'm going to become a fund manager for these options, for these funds right here. But I'm not going to go as risky as I go, which means I'm not going to leverage your money. I'm not going to leverage the fund's money. Okay, I'm going to play it safe, as I even say right here. Okay, this pool uses both covered calls and cash secured puts to make a weekly passive income on Lira. It's going to be a Lira specific protocol. Synquote is still not available here. Once it goes, Synquote has even safer strikes, so we can even go safer if Synquote gets added here to DHedge. So far just Lira, so we're going to be using Lira. The chosen strike will always be the furthest one out of the money. What does that mean? If you go right here, the furthest one out of the money for a put is this one that we just sold, okay? For a call, the furthest one out of the money would have been this right here. But this would be a little bit risky because of the delta is 27. So this case, why am I so yellowish? I'm sorry, I'm just interrupting. I just became very yellow. Wow. Anyways, I look like a Simpsons character. But going back right here to DHedge, selling the lowest delta available on Lira to allow users to collect a weekly yield while also maintaining a safe position. This is what I'm going to be doing with this strategy. Again, not everyone is, so far, I'm probably going to leave like 10 spots from the people from the Discord, the Sleep Money Club Discord. I'm going to see if there's a lot of, there's a couple of people who wants to join this beta version of this pool, see how it goes, how it performs, and then maybe opening it up for the public. If you are interested, just reach out on Discord, just reach out on Twitter, whatever, so we can we can discuss to add you here. Even if you add like 20 bucks, 30 bucks, doesn't really matter, just for us to test it out, okay? So why am I doing this? Why am I doing this? Because so far, DOVs, decentralized option vaults, suck. How do they suck? Well, if we go to Ribbon right now, Ribbon Finance, okay? And we take a look at their vaults. So Ethereum, this is covered calls, okay? Look at this. They're saying they're giving you a projected APY of 24%. But since they started, the cumulative is 4.72%. There's a week that people lost 14% in a single week. Okay? So imagine trying to make something safe, passive income, like a safe passive income way, and losing 14% in a week. Okay? On USD is a little bit broken, but the average drawdown, meaning every time they lose money on a weekly basis, the average is 5.56 per week. This is ridiculous. This is like day trading. Okay? This is day trading sort of drawdown. Ridiculous. And if we go to, well, the covered calls are doing bad, so the puts might be doing good, right? Okay, let's take a look at these puts right here. Projected 52%. So you're gonna make half of your money in ROI. Okay, seems good. But then you look, actual yield since the beginning, minus 27, minus 28 because it's 93 right here. So ridiculous. The drawdown 10.2%, meaning every time you lose money, you lose 10%. This is a knife. Like, this is like someone stabbing you with a knife every time you lose. This is ridiculous. Very, very bad. But this is where this pool will come in. This, at least if it performs well. But my strategy is performing good without these risks. As I said last week, I think actually this week in Thursday's, I think it was Tuesday's live stream, I said my drawdown is 4.7%. Okay? And I've had only 2 weeks negative. 2 weeks negative out of the 24 right now with this that I invested. So still outperforming these DOVs, still outperforming by a lot. So what I'm going to be doing is I'm going to be managing these funds. I will have some fees right here. Actually, I changed these. I'm going to put this to 10% in performance. So 10% annually out of these profits. I'll keep it. I think is a fair amount. And I will go for a 0.7% per week. So very, very safe. But even this, if you compound weekly, a projection is a 43%. But again, this is a projection, because if we go 1 week 0.7, the next one we go 0.9, but then we go 0.4, okay? It might not go to 43, but it's still gonna be a hell lot more if we compare this to Grizzly, if we compare this to 17%, okay? And you're not gonna get paid. You're not gonna get paid into no governance token, okay? You're gonna be holding the Vaults token, which I called OPT, I think, if I'm not mistaken. Yeah, I called OPT. Yeah, OPT token. But these tokens, you can then change them. You can dump these tokens. It's okay for you to dump these tokens because they don't mean anything. They don't mean anything. For you to dump these tokens for stable coins, for whatever you deposited, okay? It's gonna be, you can take them back from what you deposited. So if you deposited Ethereum, you can get Ethereum that you deposited plus the fees that we made from selling these options, okay? And the yield's gonna be better. Even if I choose the safest ones, I'm gonna beat Grizzly. Again, Grizzly is doing an amazing job as an aggregator, no shame. But this way is a way for you to make some money. I will make some money, because if the pool is negative, I don't collect any fees, because it's just performance fees right here. So if the pool is negative, it's losing money, I don't make any money. But if it's making money, everyone makes money. I make money, you make money, the protocol makes money, of course. But this pool, as I said, for now is going to be in beta. It is locked. No one is in it. I'm going to add 5-10 people to see how it goes, and then we can go from there. I'm going to keep you updated on how it is performing. Then later on, we might provide it for everyone in the Sleep Money Club if that's something that works for the club, okay? And go from there. Now, let's see if we have any questions so far. James Smith, that's very cool. Yes, that is very cool. I like, I've been trying to make something like this. I even started to study Solidity, which is the language, the blockchain language, you know, the major one. There's a lot of languages for blockchain development, for contract development, but Solidity is the biggest one because they want it. Even when DeFi Farmer was like 10,000 subs, 4,000 subs, I wanted to make a protocol to help people who don't have time. And this, I don't need to make a protocol. It's already there. I can just manage these funds without having access to these funds. So I cannot just run away with the money. You know, everyone is liable. Everything is transparent. So I think it's a win-win situation for everyone. So, wow, it is hot in here. So now that we have this out of the way, let's talk about the FTT situation a little bit, the FTX situation. As we know, shit hit the fan. I personally did not lose any money, fortunately, because here in Brazil, FTX is not the biggest exchange. Not a lot of people use this exchange. They use Binance. Binance here is the number one, as monopoly over Brazil when it comes to crypto. But I do want to talk about it just because now people are starting to understand how the valuation for FTX was so big, and it's pretty much the same thing Celsius did, okay? Which was the flywheel effect. If you don't know what the flywheel effect, let me explain that to you right now. Let me see top view. Yeah, you can see that. So we have right here the FTX exchange, okay? They have the FTT token. They mint FTT tokens, okay? Then what FTX was doing, they were giving FTT to Alameda, okay? And then Alameda was borrowing these tokens from FTT, and they were borrowing USD or any other stablecoin, okay? USDC, USDT, DAI, whatever, using FTT as collateral, okay? So they were depositing FTT and borrowing USD. Then they were sending this USD to FTX to buy more FTT tokens. And not only Alameda was doing this, also SBF himself was doing, he was one of the major people buying the FTT token. You could see that on his tweets. Every week he would just post a tweet saying, buying whatever. He was buying 4 million, 5 million at a time, FTT tokens. When this happens, the more people buy FTT, the more the price will go up, okay? The price will go up because people are buying FTT. But these people are actually Alameda. So once FTT goes up in price, they borrow more FTT. They borrow more stablecoins against this FTT, and then they buy more FTT with these stablecoins. So you see how it goes. This is the flywheel effect. Celsius was doing the same thing. And then after this, FTX would go to investors and say, look at the FTT token. It is going up. It is worth more. So this would inflate their valuation. Valuation. I'm not drunk, I swear. I'm just bad at writing. So the more valuation, it means that now the company should be worth more, right? But this right here is a fake number. Why? Because this valuation is inflated. This FTT token is inflated. They're doing that by themselves. Then they will get more money from investors. They will give them more money, and they would buy more FTT with the investors' money. Okay? Or instead of buying more FTT instead of FTX buying more FTT, they would lend this money to Alameda to trade, quote on trading, and then Alameda would get this money, buy more FTT tokens. This is the flywheel. This is Ponzonomics 101 pretty much. They even described it, SBF even described that himself on an interview. You have a box and you say that box is worth X amount of dollars. Then more people are going to pay for that box, okay? If I say this box is worth 1K, then people buy that box for 1K, and I can say, well, now the box is 2K because a lot of people want to buy it for 1K. And the price goes up and up and up and up. And then the box is pretty much empty. And now we're seeing this because, let me see if I can find the tweet. A lot of FTX was linked or had his dirty hands on a lot of other protocols, a lot of other centralized exchanges. So let's see if I can find this. Is it on DeFi chat, maybe here on Discord? There we go. Look at this link right here. FTX contagion. Okay, this is everything that has to do with FTX. So FTX US, FTX, and Alameda all declared bankruptcy. Okay, but BlockFi had a loan with FTX. Okay, 400 million revolving credit option to acquire. So now also BlockFi is screwed. They had to stop withdrawals. They're considering bankruptcy. Now, Genesis, we still don't know the exposure, but Genesis is the major partner for Gemini. Okay, now Genesis halted withdrawals, same for Gemini. Huobi, 18 million locked with FTX. Ikigai, which is a hedge fund, majority of assets were exposed on FTX, were stored on FTX. Salt, which is another laning protocol, exposure we still don't know, but withdrawals were halted. Celsius, same thing. Alameda had loaned 12 million to Alameda. Another VC, another exchange, hedge funds, venture funds, Web3 startup, market makers, DeFi infrastructure. You see how many things are connected to FTT and why it does not look good for crypto right now. This does not mean that crypto is dead, anything like this, but this will bring crypto like 4 steps back. If we are like climbing steps with this situation, once everything gets public, we will have a very, very, very bad market. I think like 2 years of winter, crypto winter, at least. Very, very pessimistic. And to make it even worse, to be honest, because this doesn't make it better. We have, for example, streamers, Twitter stream, YouTube streamers.
This is the streamer I show speed.
Twitch streamers, whatever it is, that promote scams, Ponzi's, whatever you want to call it, shady projects on their channels. The latest one is I Show Speed, which I'm not very familiar with. But for example, he started promoting a Web3 game. Of course, we know by now that Web3 gaming sucks, okay? If you are in DeFi, if you are in crypto, you know Web3 gaming sucks. We learned it right on with Axie Infinity, okay? If you're playing for money, the game's gonna suck. And if you're playing for fun, there's no fun game to be played right now in DeFi or in crypto. No. There's a bunch that are doing good. They're getting there, okay? They have good bases. We have the Zoo Racers from Zookeepers. The game looks good. Still very bland. Still not a lot to do as a game. Okay, you don't have fun playing it, but it is getting there. Okay, but now these guys, they were promoting a Web3 game, play to earn game. You can rent your avatar, all these things, NFTs. You know the drill. But they actually reached out to one of the biggest streamers right now, at least new generation streamers, which is I Show Speed. And we have this controversial video. I'm going to show a clip from CoffeeZilla right here. Let me see if this one. Okay, let me see if you can hear the desktop audio.
What's going on?
All right, so look, it's cool now. Relax. Yo, relax. Why listen to the chat? You see no more scams. Trust me.
The microphone.
I know. I'm just trying to make. No, bro. You know what I'm doing, bro. No. I'm not gonna say that, but then it's gonna be obvious, bro.
So, if you don't understand what's happening here, his chat started to call him out to say, yo, this is a scam, you're promoting a scam. Twitch is already kind of on the edge right now just because they just recently banned gambling, all these sort of things. Now crypto is not looking good because of this. I don't think actually Speed is on Twitch. I think is on YouTube. But anyways, this does not look good for crypto as well, because normies that have never heard of NFTs or crypto, or they have heard but they don't know, like we crypto focused channels, crypto focused guys know about, we can say, hey, this is a scam. But normies and young people, because his audience is younger people, like 14, 15, 16 years old, they can get wrecked. They can lose money, sometimes they can lose their parents' money. So this is a bad situation for crypto as a whole. Going back to the whole thing of crypto is in a bad spot right now. The spotlight on crypto doesn't look good. The media doesn't talk good about crypto. Governments already hate and will hate on crypto forever, especially DeFi. We will have DeFi and centralized finance for sure. There will be a huge gap between those two. So DeFi itself is not very well received in the eyes of governments and all of that, which is what we actually want as DeFi users. I don't want governments to be able to know where I'm keeping my money, to know what I'm doing with my money, to tell me what to do with my money, okay? But we do need regulations because of these stupid people, scammers, these guys right here promoting shilling stupid things. So my opinion is crypto is in a bad spot, at least right now. For a couple of years, I think we'll see a sideways market. I don't know if, I'm not going to call the bottom, okay? I'm not BitBoy Crypto. I'm not Michael Burry. I'm not going to call the bottom. I still think we have more to go down, but I don't know where's the bottom going to be. I cannot tell you, hey, once Bitcoin reaches $13,000, it is time for you to buy, okay? I'm not going to be saying this. It's not who I am. I don't have a crystal ball. I have one actually, but it doesn't work. It doesn't tell you the future. So my thing is for you to look for safe alternatives, which means aggregators that allows you to invest into stablecoin farms. I'm going to be covering these farms on Mondays again, shilling it right here. Mondays are going to be yield farm Mondays, okay? We're going to go look at aggregators. If you have any aggregators they want me to cover, let me know. We're going to cover them up, see if they are legit, see if you can make money on the long term, only for the short term, if it is worth your time or not, all of these stuff, all of this. Wednesday, I still don't know what to do. Let me know if you have any idea what to do on Wednesdays. And then on Fridays, it will be very much options related, okay? 1 hour and 14. This was the longest stream so far. So I'd like to say thank you guys for everyone who joined this today's live stream. I personally, as was talking to some people, I do enjoy making this. It makes me happy. I can actually interact with you guys, and just like a video where I just make the video and then read the comments, react to the comments. No, I am reading these comments, which are very few right now. I understand very few people watching right now live, but we have a one-on-one interaction. I can help you if you have any questions. We can talk face to face. You can reach out offline as well. But I like doing these, so I'm gonna do more and more. We will get better together. I'm just starting. Lives are hard, to be honest. It takes a lot of time and effort to do a good live stream. It's not just what happens right here, it's what happens before, what happens after the live goes off. So there's a lot of preparation, but I do enjoy making this. So I'm gonna be making these if that's something that you guys wanna keep seeing. So anyways, just wanted to say thank you. Let's go back to this camera right here. I don't have any more things to say. If you have any more comments, just drop them down right now. Otherwise, you can reach out on Discord. You can join the Sleep Money Club, so you can talk to me every day about any other option, any other topic that you have. The link's also here in the description, as well as the link for the crypto options, the course. And again, thank you so much for everyone here. We have a question. Thanks for your stream, man. Looking forward to that options opportunity. Thank you, James. If you're interested, just let me know. Just reach out. We can talk about that. But yeah, I appreciate every single one of you guys that are here, that will be watching the video later. If you're watching the video, not a lot of people watch the video later. So thank you for watching this especially long video, over 1 hour and 15 minutes. You are the real OG. So again, I appreciate every single one of you, and take care. Peace.